Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to have you all back with us. Seth Udinsky, Sam Case back with us, and of course your host, Mark Manila. Gentlemen, it's good to have the band back together. Mark, how you feeling, brother?
Yeah. Oh, I feel great. Welcome. Happy Monday, everyone. And here's something I couldn't say last week. Welcome back, Sam.
There he is.
Good to have you here.
Sam's
Good
back.
to be here. Glad to see the board's not on fire. The studio's still here. Seth, the buttons are sticky, though. What's up with that?
My grubby fingers on them, Sam. That's what it was. Can I make the joke? Sam is back with us. He's back.
Too soon, man. Too soon.
A lot of back jokes there.
I get it. I get it.
That's awesome.
Get it.
It's great to be here with you today, folks. Hey, 610-363-1110. Our phone lines are wide open. We got a packed show planned today. You don't want to miss out. It's going to be a good time. Mark, what do we got teed up for today's show today? It's going to be a fun one.
Well, one of the things that we're seeing is there's news report about the number of billionaires and millionaires. Mostly it's being used as a way to try to divide the nation, but we want to talk a little bit about that and the reality of it. And we're going to look at a poll, the top financial resolutions heading into 2026. I always like doing this because it's so much fun to see where people are putting their hope. But first, we have a pressing story.
Yeah, Mark. So, we've been talking about the ins and outs of year-end giving, kind of doing a little December series on this. And I found this to be a fascinating topic here, Mark. I'd love to hear your thoughts on this as a businessman as well. If you want to give from business interests or annuities, how do you do that? What do we need to know about this, Mark?
Well, that's an interesting thing. It can get complicated. So I'll say right off the bat, probably a lot of our listeners and a lot of our partners aren't going to really care too much about this segment. It's not going to be that big anyway. But when you give from your business, if you run a business, depending on the type of business, it could be very impactful. But it also can be a little bit complicated for some. If you have a pass-through type entity like an LLC or maybe a sub-S or something like that, what happens is any losses or gains pass through to you. So if you give out of your company, then the company then can deduct that from the income, which reduces the amount that passes through to you to put on your tax thing, so it could reduce your taxes that way. And if there was a loss for the year because of the charitable giving, then that loss also could pass through. If it's not a pass through, then it's totally different. Most people who would do this type of thing are sophisticated enough to have an accountant on their payroll, at least somebody that does their taxes, helps them with their filings and whatnot. So you want to check with your accountant or your tax advisor for your business to see, is it best to give from the business or is it best to go on and pass it through for your complete planning on that. But another item that we haven't talked about is annuities, Seth. Yeah. And I know that historically we didn't talk a lot about annuities on the show. Previous hosts hadn't, but annuities are just like anything else. When the money comes out of it, any tax-deferred type of vehicle, it's going to be taxable. When you take the money out to give it to a charity, then you end up getting a tax deduction. Hopefully that tax deduction, if you are itemizing your taxes, will offset the taxes in that. I'm not saying it's not a good thing to give out of your annuity. I'm just saying that if there's other ways to give, you might use that money a different way. And if there's a better way, like using your IRA, if you're over 70 and a half and you want to give out of that, that's a better way to give. Using the qualified donation there, you win more that way. The money goes further that way. So I would say giving out of the annuity is one of the, any giving is good, but giving out of the annuity would be one of the ones on the last of my list to utilize for my gifting, bottom line. There are other types of annuities that people think about as far as giving, but this is given to that annuity charitable gift annuities. Some people have utilized these in the past and they found it to be worthwhile. Some people have tried to use them and they haven't been as worthwhile as they really wanted them to be. And the issue is, a positive aspect is when you give to a charitable gift annuity, what happens is that you don't donate the whole amount, but a good portion of it can be deductible, and then you get an income for life, and then upon your death, the money stays with the charity that you opened the charitable gift annuity with. So effectively, you're funding the charity down the road. The issue with them is that you lose control of it, so you lose the stewardship over it, which may not be a bad thing if you're not a good steward. No, it may not be a bad thing. You know, sometimes shifting stewardship is a good idea. You move it to people who steward something a little better. But oftentimes, the income you get from it, if you're doing it to help supplement like retirement or something, the income you get from it is very modest, to say the least. Oftentimes because of the cost of setting up the charitable gift annuity and the internal expenses of running it, doing the filings and all that kind of stuff, money comes out of the money you donated to take care of the overhead, to compensate the administration and money managers and that kind of thing. So sometimes CGAs aren't the best way to go. It might be... it might be better to look elsewhere. So at the bottom, pretty much near the bottom of our list are annuities in general for a giving vehicle. Not that they're bad. And in some cases, a charitable gift annuity might be right. If you do want a little additional income and for your retirement, and the amount isn't that critical, like you're doing well, this would just put a little sugar on it, a little froth on it, then that would be good. If, on the other hand, you don't need it at all, then there are better ways to give that could have more impact, as we talked about earlier in earlier shows.
Mark, that is great to know. Folks, if you got questions, give us a call right now, 610-363-1110. Again, 610-363-1110. And, you know, if you like...
Seth, it's so good to hear you say that.
Appreciate that, Mark. I missed it. I missed saying it last week, but you did a great job, brother. You know what's great, though, Mark? This is your show, so you can say it whenever you want to. You can even interrupt me in the middle of it and say it if you want to. 610-363-1110. Mark, what I was going to say was, you know, if folks are looking for a worthwhile ministry to give to, of course, financial issues would be one, especially if you're a Christian. We align with your Christian values. If you click the donate button on our website, financialissues.org, that takes you to a place where you can give regularly. You can just make a donation, a cash donation. But if you scroll down, you can also look at the non-cash gifts page. And there's different options there, QCDs, donor advised funds, gifts of life insurance, you know, all sort of different things, gifts of appreciated stock. If you're interested in that, based on some of the things Mark just talked about, what we've been talking about the last couple days, you can check that out right now. It's all at financialissues.org. Where you give is between you and the Lord, but we just want to give you an option. So yeah, consider doing that today. And folks, seriously, call in today. We'd love to get to talk to you. Our phone lines are wide open. They're going to be open for the next 45 minutes. So give us a call at 610-363-1110. Mark, Sam, very interesting here. The number of billionaires is now reaching a record high. And I want to hear what's going on with this, Sam. Mark, I'd love to hear your thoughts on this. What is happening here?
So this comes from Swiss bank UBS. This is their data for this year, finding, as you said, the number of billionaires in 2025 has reached all new record highs, over 2,900 billionaires across the entire world with combined wealth of nearly $16 trillion. The U.S. has the most of those with 924 billionaires, followed by China with 470. By the way, it's not just billionaires that are also increasing. At the same time, we're also seeing more and more millionaires as well. Households with $1 million or more has also reached new highs of more than 24 million in the United States. That's almost 1 in 5 U.S. households.
So, Mark, I'd love to throw an invite to our listeners here. If you're a millionaire, and you don't have to broadcast it, but if you want to, you can. If you're a millionaire, call in and tell us, do you feel like a millionaire or do you feel middle class? Because that's something that I was thinking about this, Mark. You know, what does this tell us here? I'll let you talk about it first, and I know we might need to bring it into the next segment, and that's okay.
Yeah, we might have to, with only a minute, 20 seconds left, we might have to roll this over to the next segment. But, you know, I think that even though it's making big headlines, we're not really getting the full story. This is, again, one of those things used to divide the different type of people, you know, different classes in America. This isn't really about billionaires. It's about the value of money. It's about how inflation is silently brought down the impact of being a millionaire or being a billionaire, So it's mathematical, not miraculous.
Mark, I think in the 1890s, there was only 4,000 millionaires in the United States.
Wow. Yeah. And that sounds like a big deal. Back then, $1 million meant a lot. It doesn't mean what it used to mean. And again, that's inflation. That's what inflation does to our dollars. And we're going to talk more about this when we come back, because when you inflate dollars, you also inflate the number of millionaires and the number of billionaires. So as the dollar inflates over time and devalues itself, $1 million devalues itself as well. And I'm looking forward to hearing what our listeners have to say. That's 610-363-1110.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay or to go, to remain the same. Read carefully before investing.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Boy, folks, we really would love to hear from you, especially if you've got experience in what we were just talking about. The number of millionaires, billionaires seems to be growing. Net worth millionaires. Some of you guys in the chat had been asking, what I meant by that. Yes, you are correct. It's if you're a net worth millionaire, what does that feel like? And Mark, I know even when we talk about that, a lot of people, their net worth is heavily wrapped up in real estate or their retirement account. So it's not like you have $1 million on hand.
It doesn't mean they're laughing like,
look at all this money I have. Yeah, that's exactly
being a millionaire today is nothing like it was 20 years ago.
Yeah.
I mean, it really isn't because of inflation. The bottom line is it really means that you may be just another middle-class type of person who has a home, who owns a home and has a 401k that they've been funding for the last 20 years. So there's a lot of people who've been made millionaires just by that and the inflation, or what we should really be calling it is the devaluation of the dollar. $1 million doesn't go as far anymore. I remember when early on in my financial planning years, we used to talk about how much do you need to retire? And we were talking about hundreds of thousands of dollars for the average middle-class person. Now we talk about millions of dollars just to sustain the middle-class lifestyle. So what has happened is that over time, the devaluation of the dollar has caused the concept of millionaire to drop down to being a norm. Not almost 20% of the households in America are millionaires right now. by balance sheet. So think about that. So now it's more of a norm than it is anything else, if you think about it. So, and I also think the main reason for all the talk about this is because there are so many people who believe that they grew up with the term millionaire. They grew up playing Monopoly and wanted to be a millionaire, you know, and a goal was to make $1 million. And when I was a kid, being a millionaire meant something. It really meant a lot. I mean, you were comfortable for life. You didn't have to worry about money. That's not the same thing today. Real estate drops off or the market drops and your lifestyle will change even as a millionaire. Now, I get it. There's some people listening saying, well, I don't have $1 million. How am I going to survive this whole thing? Well, I get it. But the whole point here is there's two things I'd really like us to understand. One, being a millionaire doesn't mean what it used to be. It's just stuck in our mind from growing up under the concept that $1 million was huge, huge, huge amounts. Today, it's just huge. It's not huge, 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 okay? And secondly, the story isn't about really being about millionaires. It's about dividing the different classes of our society so they can divide and conquer. The idea is to get you who aren't a millionaire to argue with those who are a millionaire or a billionaire, and get you who don't have millions and billions to feel bad about your existence, and those who do have it to feel guilty about it, so we can have class conflict, and then socialism starts sounding good to some people. That's the whole idea of it. It is a trick. It is a strategy to divide our country, to destroy it.
Yeah.
I want more millionaires. I want more billionaires. I want our average, we talked about last week, the idea that the average person, impoverished person, now has a roof over their heads, have 1.35 cars, I think is what it calculates out to be, have a Game Boy, have internet, have heating and cooling, have cable, and the number one reason that they die is because of obesity. Okay, that's our impoverished. I'm happy that that's our impoverished, not living on the street, not having food, dying of starvation. I'm glad we have a lower class, impoverished class in the United States that has been raised up so much by capitalism that they have to learn to start restricting themselves from eating too much, spending too much, and playing too many games so they can become productive. I love the idea that our impoverished are in better shape than 90% of the country, the middle class in the world. I love that. I would like to see us raise it all, and I'd like to see everybody raise up with it. That's a good thing. That shows that compassionate capitalism based on the foundation of God and the Bible works. And without God, it doesn't work. We know that. You know what? Capitalism, we remove God. We remove Jesus from the middle. If we remove the Bible from capitalism, it becomes a very ugly thing. It's just like removing the lead shield from around the uranium in a nuclear generator. It will self-destruct, and it will just destroy everything around it. We need Christ in the middle of it all. That's the bottom line here. Christ in the middle of capitalism creates an incredible ability to cure disease, to create a healthier nation, to increase wealth for everyone. Don't let the socialists and communists lie to you. Don't let them divide us. Yeah. We should be caring for one another and loving one another. This story is just another one of their silly strategies to try to do that.
Yeah, Mark, it's the same monster that we saw last week of that story that we read about how now apparently all of us who make under $140,000 a year are woefully impoverished.
I'm basically living in a box.
I'm living in my own filth, I got to tell you. No, it's ridiculous. You're exactly right, Mark.
It is ridiculous.
We have to call this stuff out when we see it, for sure. As you were talking, Mark, about that idea of compassionate capitalism, it reminded me of the economist Adam Smith, I believe from the 18th century, talked about the invisible hand, which was kind of like that idea of the invisible hand of free trade. And my thought was, if we try to take away the fact that really it's the hand of God that allows that to happen, it can become really bad. So we need to understand, no, that's the hand of God being able to, like you said, give even impoverished people the chance at a good life and the chance to make something for themselves. Yeah. Like that really is a gift.
You don't want to end up with Ayn Rand, who replaced the cross with the dollar sign and says the highest goal in life should be selfishness and self-interest because that's how capitalism works. You don't want that.
Right.
Oh, my gosh. My head's starting to hurt. Yeah, praise God for God. That's the bottom line. Yeah. I woke up this morning feeling that way. I thought, I know we got a show planned. There's all sorts of things, but I wanted to talk about a few things, and maybe I'll just take a moment here. One is we did a survey, and one of the things that was down on the list of things to talk about was giving. And guess what we talked about all last week? Giving. Right? Yeah. Another, one of the things that was not at the top, but near the top was talking about God and the Bible in investing, which I think is very good to see that and would have been expected of all our partners and those that were surveyed. But here's the thing. We talk about giving not because we're trying to be convince everybody to give to financial issues, though we do appreciate that. That's how we stay on the air. We talk about giving because it's so important as a part of stewardship. If you don't understand how important it is to trust God with your money and to do what he says to do with it, and that's along with caring for yourselves and those he puts in your path, to be a conduit of it to others, like the church, like other ministries. If you don't understand that, you're not realizing the fullness of Christ. So we won't stop talking about giving. Of course we won't. It's so important, any more than we'll stop talking about investing with biblical integrity. It's important. We want you to take that step every day with biblical responsible investing. Somebody out there still holding a few stocks that we put on the sell list because they compromise biblical integrity. They compromise God's tenets of love. They're hurting God's heart. They're hurting your walk with the Lord. We don't want to see that happen. We want to see you grow deeper in your relationship with Christ and embrace that. We want to see that happen in all aspects of the stewardship pie, including giving. When you learn to give hilariously, you start realizing the joy of the Lord like never before. So we're going to continue talking about that. And maybe it's so far down on the list in when we took the survey of things you wanted to hear about. And maybe it's because some people feel like we're hammering them or lecturing. That's not what we're trying to do. It's just one brother or sister in the Lord sharing with another brother and sister in the Lord the crumbs we have found, the truth we have found in God's word. And we want you to realize it. It's like God said about debt, trust me in this, or in giving. Trust me in this. It will be returned to you, packed down and overflowing. He's not saying it's all going to come back in money, but he's saying take that step, trust him, and see if your life does not improve over time by doing exactly what he calls us to do. If God is truly the God of the universe, the all-knowing, shouldn't we listen to him? And if we listen to him, wouldn't we see the joy and the peace and the treasures that he has for us? That's why we talk about giving. That's why we talk about biblical responsible investing. That's why we talk about making choices on where we shop. That's why we talk about how we spend our money, how we make our money, because all these are parts of stewardship that God has given us instructions on how to live. And that's why we're going to continue to share these things with you, along with all the things we do in the investment arena, so you can become a great investor on your own. That's our goal. And the reason we talk about giving to financial issues is because we couldn't do this without your money. So we trust that God will bring the money in, but I also realize that we have to talk about these things that a lot of people don't like to hear, so that we can continue on and, if possible, grow the show so that we can reach more and more people with the truth about a deep relationship with Jesus Christ is the only way. There's only one way to realize the fullness of Christ, to realize the joy of God, to realize peace that surpasses all understanding, and have eternal life. There's only one way, one truth, one life, and that's through Jesus Christ. We will never stop talking about these things, but we will stop for a few seconds here in about a minute and 13 seconds to go to a little break.
It always comes, doesn't it, Mark? Hey, we want to hear from you folks. Listen, if you agree, disagree with what we just said, we want to hear it. We'd love to talk with you. We'll talk on air about it. 610-363-1110. Charlie, we see your call in the call queue. We'll get to you on the other side of this break, brother. Light up those phone lines, folks. 610-363-1110. Hey, quickly, guys, we'll see how the markets did on Friday. They were cautious for yet another day, but they were encouraged in part by a light inflation report. I don't think too spooked yet by the fact that there is a Fed meeting coming up on Wednesday. But by Friday's bell, the Dow Jones finished up about 0.25%, S&P 500 up about 0.5%, and the NASDAQ up about 1/3 of a percentage point or so. Pre-markets priced into open, again, positively this morning, similarly, actually, to how they ended on Friday. So we'll see what comes of that as we have a Fed meeting later this week. We want to hear from you, folks. Call in at 610-363-1110. If you have to leave us, we hope you have a great rest of the day, and we hope to see you tomorrow. But for the rest of you, a lot more financial issues on the other side of this break. Don't go anywhere.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
My baby was like this big. He's like this tiny little spectrum of hope and this unnamed beauty, in a sense. It was poetic. And I saw his heart beating on the screen. And I mean, I went from, I don't want this baby, it's just a fetus, it's just cells put together, to talking to my child on the screen and feeling really protective and knowing that there's life growing inside. I mean, that sonogram changed my life. I went from just Candace to mom. I'm a mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Give us a call, folks. 610-363-1110. 610-363-1110. Light up those phone lines. We'll get to you in this segment. If you call right now, we'll get to you in this segment. Otherwise, we'll get to you in the next segment. But why put it off for 15 minutes? Give us a call right now, right, Mark?
You had to wait all weekend to just call in. So.
I know. But we're back now, right?
We're back. Exactly.
610-363-1110. Mark, let's go to Charlie. Charlie is calling from North Carolina.
Welcome, Charlie. Happy Monday. What's on your mind?
I was wondering, is there a tax advantage, if any, to donating stocks that are up from a regular investment account to the church or a charity?
Oh, absolutely. Glad you asked. You're talking about the physically, just not taking receipt of it, not selling it, but transferring shares of a stock that has grown over time and has a good gain in it. Yeah, there's benefits for you and there's benefits for the ministry. So both win by doing it that way instead of cashing it out, taking the money and dropping it in at the church. By donating stock directly to the church, what happens is all those capital gains, you don't have to pay taxes on them because you're donating the stock at its current value. You get to deduct 100% of the value of the stock. So if the stock was $100 and it went up to, I'm going to be ridiculous here, $500, and you donated that stock in the shares of the stock directly to church, you wouldn't have to pay any of the capital gains on there. You wouldn't have to do anything like that. You end up just being able to deduct 100% of that stock at its current value as a donation to the church. Then the church receives it, and the church don't have to pay tax on it either. So the church receives more money. So church gets more money, you get bigger deduction, everybody wins by doing that. And it's a real easy thing. You call the church, you say, hey, I want to donate stock to you. And if they don't already have an account, you help them to get their account set up at a brokerage or somewhere. And then you call your platform and you say, I want to donate X amount of shares of this stock to the church, and I want them to be the most highly appreciated shares. And so if you bought it, if you dollar cost averaged, or if you did it over time, if you're not given the whole, all the stock in that one issue, but you're given certain ones, you want to give the most appreciated shares to the church. And then you get to deduct the full amount. They transfer to the church's brokerage. You, on that day that they transfer, they will set a price that stock was worth, and that's what you get to deduct per share for what you gave on that day. So absolutely, Charlie, good insight, and it's a great way to give. It's one of the better ways to give out of just a standard investment account, a non-tax qualified account like an IRA or otherwise. So yes. Absolutely. Bottom line, yes. Thank you so much for that call. God bless you.
Appreciate it,
All
Charlie.
righty.
610-363-1110. Mark, here's a good question came in from Mike, one of our partners, 65 years old. So here it is, Mark. He says, after this long bull run, how should I handle risk in addition to tax issues when I'm still mostly invested in growth stocks, even when there seems to be a lot of bearish signals concerning the markets? What do you think?
Wow, that's a good question. Where we are in the market is very important. We've been in a long bull market for a long time. And this extended run often create unease among many people, especially long-term investors, because they know the markets do go up and down. There are signs of slowing in the cycle, so we may be getting close to a peak, or we may have hit it already. So that alone causes people to worry about, is it going to pull back real hard? We saw some pullbacks recently in tech and AI, which is a beginning indicator, possibly an indicator. I'm not saying it is. So risk management is really a big part of this, Mike, and it's part of biblical stewardship. What's Proverbs 27:12. A prudent man foresees evil and hides himself. The simple pass on and are punished. So what I take that as telling me is we have to look at the reality of the situation. And at 65, if you're in growth, and I know a lot of people who are, it might be time to start rebalancing toward more of a growth and income portfolio. Most people don't like hearing that any more than they like to hear, when you're 80, 90, 100 years old, hearing, Dad, maybe it's time not to drive anymore. We don't like to hear we need to move away from that incredible growth we've seen over this last 10 years or 20 years of our investment life. So But it's okay. Still having growth at 65 is okay, but not exclusively. I'd say start moving, gently moving, getting more income, step by step, getting more income into your portfolio. One way to do this is by taking a look at your portfolio, seeing all those issues, those stocks that may be way out of proportion, that may have grown way outside of its tolerances for your portfolio. Possibly trim those back and utilize some of that money to move into some income producers, maybe some preferreds, or maybe into just some income type vehicles like REITs or whatnot. So strengthen your cash a little bit more and begin to look at that. So so if the money isn't in an IRA or a Roth IRA or in a 401k or some tax qualified, you will have long-term capital gains. So it might be a good time also to get rid of some of the weaker things, those that you have capital losses, and to help offset that, as we've talked about for the last 3 months or so. And if possible, and it is very possible now, you might want to, if you're going to sell off some really big winners or trim them back down to within their asset allocation area, 3 to 5 to 7% from 30%. If you're going to do that, do it over 2 years. Do a little now and do a little at the beginning of the year to do that. And then utilize that money to go into some more just higher income producing products. And you also could, this time of year is a good time to consider gifting. If you have gifting on your mind, which a lot of people do at the end of the year, another way to help offset some of those gains is not to realize them by gifting some of that stock out of your non-qualified account, like we just talked about with our caller. So, these signals that we're seeing in the market, they're nothing to be afraid of. As long-term investors, markets go up and down. The bear markets, they last a very short period of time compared to 6 times less, 4 to 6 times less than the bull markets. So we're not saying panic. We're just saying let's just be a little more prudent at 65, since we don't have years upon years to recover. Let's go ahead and start making your portfolio a little bit less rocky to pullbacks by moving into some of the things. Markets change, God doesn't. Let's listen to him. We see in his word where he tells us to diversify. Stewardship means acting with prudence and peace, not panicking, not waiting till the markets start pulling back hard and then just getting out of everything. Let's go ahead and start rebalancing into a better portfolio now to comfortably match where you're at in life. And now that you've created this wealth, let's start looking at more preservation and slowly getting trimming back the large winners, getting them back within their asset allocation guidelines, and then repositioning some of those gains into areas that can help stabilize and reduce the portfolio risk for you. I hope that helps, Mike.
No, that's great. Mike, thanks for the question, brother. Folks, give us a call at 610-363-1110. Mark, I'd love to get to one more quick question here if we could. I think we can squeeze this one in before the end of the break. Dale is saying, I purchased UPBD back at the end of 2023 based on a buy recommendation. Continues to be listed as a hold on the broad list. While the dividend's good, the value of the stock has been on a downward trajectory since purchase. Do you expect the stock price to recover its value over time?
That's a great question. Thanks, Dale. The reality is at this point we still do, or it wouldn't be on the hold list, it'd be on the sell list. So, the company has had like some one-time write-offs that cause it to have some problems and stuff. But, I do believe it's possible. Look, it's right now at the price it's at, it's paying a 9% dividend yield, and it's still covered. It's not well covered, but it is covered. We think there's possibilities that they will recover. Their earnings are projected to increase in the future. So with that said, that's really good. Last year only showed 4%, but I think I think I saw where a lot of analysts are looking at about 33% increase in earnings growth per year forward. So that's a good sign. So should you expect recovery? Yeah, I think so. But that doesn't mean you should hold it. If you're very uncomfortable with it and you don't like that 9% dividend you're receiving, which I think you should like it, by the way. A lot of stocks don't even do 9% a year. A lot of the S&P 500 stocks never reach that. So you could earn 9% by just waiting for it to recover, or if you're just uncomfortable with it, go ahead and sell it and reposition it. I mean, right now it's on the hold list because we don't want new people moving in until we see it rebuilding the steel that it once had. And we believe it has the opportunity to do that. And we believe we can make 9% just holding it till it does. That's not a bad return. Thanks for your question. And then thank you right now for being with us and staying with us.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
My wife and I help lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Get your call queued up, folks. We'll get right to you here at 610-363-1110. The market's just open, guys. The Dow Jones is slightly down, the NASDAQ slightly up, and the S&P 500 is right at the flat line. So a bit of mirror imaging going on there. Not much movement as we've started the day here. Mark, we do have a call in the queue. Let's get to Blair.
Let's go. Blair, welcome Virginia. To the show. Glad you're with us.
Hey.
What's on your mind, Blair?
Mark. Well, Mark, first of all, I've been a partner for about 6 or 7 years, and started off with Dan, loved him to death. Shannon took over, did a great job, and it's so good to see that you've joined the team and you just put a lot of confidence back. So I look forward to listening to you. But I am at 67. I plan to hopefully retire mid next year. So let's call it 6 months. I am in the growth and income asset allocation. I've got about 52 holdings. Based on what you've said, I probably should trim that down. But my point is that at what point do I need to go over to strictly income? And like you just said on an earlier response, it's kind of like taking your car keys away if you don't have a lot of growth in there.
It feels like that,
point.
doesn't it?
Right?
I know. It's really funny. Well, Blair, I love your question because the income model doesn't have a lot of growth in it. I really suggest that for most people, you need to keep some growth in your income. Even if it's a pure income model, you need some growth in there to keep up with inflation. So being in a growth and income model portfolio is not a bad idea at 67 or 75, actually. It won't hurt you. Actually, it'll help your portfolio keep up with inflation, because those stocks that you buy in the growth, if they do grow like we hope they do, then what they'll do is increase the size of your portfolio. Then you trim them back and you move some more of that into the income. Then your income goes up, and then you let those growth grow some more. That I like the growth income model for people your age, Blair. I think you're in a comfortable place, actually. Now, if you start feeling like, oh my gosh, I just can't afford the markets going up and down with 10, 20, 30, 40, 50% of my portfolio, you could trim the amount of growth back a bit and move it more towards income. In fact, maybe just review it every year. Look at what's going on. Do you need a little more income? Has inflation hit on it? Trim it back, trim your winners back, get them back inside the guidelines, which when we buy into something, we usually do it for 1 to 3% of your total portfolio. And then it grows and it gets up to 10, 20%. Well, maybe it's time to trim it back to 3, 5, 7% of your portfolio, or, somewhere in there. When you do that, move some of that to income every year, and slowly your income portfolio will grow and continue to give you more income as inflation eats away at it as you go along.
No, that's very insightful, and I appreciate that. I'm probably a little heavy on cash, in part by what you've been saying here over the last several weeks or months. And well,
there's two good reasons for that right now. One is the market's going to it's getting, if it's not at the top, if it hasn't hit the top and is swinging on the cycle, it's somewhere near there. So you want to be careful at that point. So it won't hurt to have some cash, but try to find some solid income or growth in your portfolio at this point. But the other reason is because it's Christmas and there's a lot of presents to be bought, so you might need the cash for that.
For sure. Well, thank you so much. And Seth, keep going, buddy.
Thanks, Blair. Appreciate you guys' encouragement, man.
Good hearing from you, Blair.
Always good to talk to you, buddy.
God bless.
God bless, Blair. It's good stuff, Mark. We got a call from your home state, Mark. Timothy is calling from Missouri.
Well, welcome to the show, Timothy. What's on your mind this morning?
Good morning, gentlemen. My question had to do with the 50-year mortgage that President Trump has discussed. I wanted to know what you thought was a good idea, or what the implications of it could be.
Okay, the 50-year mortgage concept, the idea is he's trying to make it more comfortable for people to buy a house. The issue is there's a reason why 30 years has been the standard for so long, because once you get past 30 years, every 10 years you reduce it after, you don't see much of a reduction in the mortgage payment. We looked at, I think, Seth, we looked at what, a $250,000 house or something.
We did, Mark.
And going from a 30 to 50 was only like $100 different a month.
It was small potatoes, Timothy. It was not a huge difference. And Mark, that seems to be, you're exactly right. That's like one of the big reasons for it is Trump wants people to be able to afford their monthly payments, and he's thinking this was a way that he can do that, right?
Yes.
Yeah.
And I don't really have any issues with it. Most people don't stay in a house over, I think it's 7 years, by the way, is the average or something like that. I can't remember what it is. Or don't keep the same financing on a house for over 7 years. So you want to be careful about that. I think if you can afford a shorter term loan, there'd be nothing wrong with taking a 50-year loan and paying on it like it was a 30 or a 15-year mortgage. That way you could pay it down quicker. You also could maybe reposition the difference, a little bit of that difference, if you haven't already built your moat around your castle, which we have discussed several times. That emergency fund, it's a way. Let's say that the difference is $100 a month. Well, if you put that money into an investment account, $100 a month, after about, I think it's after about 25 years, you could pay off your mortgage. 25 to 30 years, you could pay your mortgage off with just the money you've been putting away for that 50-year mortgage. So there are strategies that could be used. The impact of those is so different than, let's say, the difference between a 30 and a 15-year mortgage, and putting the difference away and that kind of stuff. Creating emergency funds so that you have less risk and still being able to pay off the house in 10 to 15 years. So a 30 to 50 year, it doesn't work as well or as securely. There's not as much margin, but it's okay. I like the idea of what he's trying to do, and the make idea for new home buyers to get into a house with a minimal amount is a good idea, especially if real estate prices continue to rise as they have over the last 5 years.
Now, Mark, can I ask a follow-up question? And
sure.
Timothy, I don't mean to interrupt you here, brother, but I really appreciate you bringing up that question, because the question that I have here, Mark, is Trump trying to solve a problem that maybe doesn't need to be solved right now? Like, I almost wonder if maybe a better issue for him to tackle would be inflation and the growing debt, as opposed to trying to make it okay for people to buy into a house right now. Am I misseeing that?
No, you're not missing. Okay. It is a problem that needs to be solved.
Yeah.
It is one of many levers that he's throwing.
Right.
That's the idea.
I see.
Right now he's saying, okay, we'll make it more affordable by having a longer term loan. We'll also bring down inflation so the cost of building materials comes down, so new houses being built can become more affordable. We'll also bring down the cost we'll start getting builders to build more by doing that, so that we have more supply on the market, which then levels out and the real estate stops increasing. The inflation on real estate stops increasing because the supply starts coming closer to the demand. In the Biden years, one of the things they were trying to do is build less houses and build more apartments and condos to keep people out of ownership, to make people more like, I don't know, a socialist country where you just rent everything from the government. That was their goal. In fact, there were articles out there saying to do that. That was the goal, is to get people to stop being owners and start being borrowers and renters. That was the whole idea. It takes more than a year to turn this around. He's flipping as many levers as he can as quickly as possible. I hate to say it, but I think that if he continues on this road, we'll see real estate slow down in price increases, maybe even have a little bit of deflation in certain areas as the housing catches up to the supply. Demand, and that's a good thing for most people. For those who own their houses, it's like, oh darn, it's not going to go up 10% a year anymore. So I guess there's a little bit on both ends of that stick. So Timothy, thank you for your call. God bless you, sir. Appreciate it, and thank you for listening to Financial Issues. The real estate thing is a very interesting thing. It's one of the things in America that has made America strong, is real estate. I love the idea that our president and our Congress and all our leaders are heading in that direction to help make real estate great again in America and make it affordable for younger people. But younger people, here's something you need to do. Stop wanting to buy your mom and dad's house that they bought when they were 40 or 50 after 30 years of working. This wasn't their first house. You can move into a starter house too. You don't need a $500,000 house or $1 million house. You could start with a smaller house just like they did. So let's also work on bringing down the greed, because God doesn't want us to work out of greed or fear. He wants us to be out of peace and joy and trusting in Him, and that's what we teach here. So thank you for being with us. Thank you for your great questions, and thank you for investing with biblical integrity. I really look forward to seeing you all tomorrow. It's been a great time. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.